Hey guys, welcome back. So last video we created our playlist that we created our watch list, and it was my honest intention to continue from there, from that watch list we formed last time. But as fate would have it, in the last couple of moments of the video, I heard a stomping of footsteps up the stairs, which soon after my two daughters burst into the room and all hell broke loose. So here we are, a couple of days later, with a fresh watch list. So let's just continue on with our playlist agenda. Basically, what we'll be covering today is the manual scan phase and the technical analysis phase. So just to be clear right off the start, this is in no way, shape, or form meant to be too in-depth. This is basically just a sample of how I would approach this situation where I have my watch list form and how I would go through it. For me, this is a pretty subconscious process. It's something that happens automatically and by itself, and it's not something I'm very used to narrating and explaining and verbalizing. So it's like, trying to explain like, your sense of balance or something. It's like very difficult in this sense. So right off the bat, I'm sorry for all the hums, ums, and awkward silences that may appear. Second, I'm not going to go through for the whole watch list since it has like 100 tickers. This is just going to be like a short sample of 2 or 3 tickers, how I would usually do it. Will it have some educational value for some of you guys? I think it will. I think it's going to be interesting, but I plan to make a separate videos which will be dedicated to technical analysis and to show you what exactly I look at. Those are going to be much more structured, much more in depth, and honestly I think I hope at least that it's going to be much more palatable, and you're going to absorb much more knowledge than just me randomly pointing out key things I like or don't like in stocks from a watch list. So with this in mind, let's just go through. So there's one thing, maybe there's 1 or 2 things that we're going to discuss before we just go through a couple of tickers. And the first thing is, it has come to my attention that in the last video I kind of sort of maybe just flew over the topic of intraday and daily divergences. So I'm just going to take a moment to explain these just a teensy bit better. Where's my super awesome photo editing tool? Here it is. So basically what we have here is market swings. So let's just take a look at this. What we're looking for daily divergences, there are basically 3 scenarios which we're looking at. The first scenario is, for example, let's say the market's going up. Now our stock is going up also, but at a much more shallower angle. This is actually a negative divergence because the stock's going up hard and your stock is just going up like for a very small amount. The second scenario is if the stock is just going sideways, like this basic lateral movement, and of course the first scenario is stock just going straight down. Now all of these types of divergences actually have their own way we incorporate them in trading. Some are incorporated in breakouts, some in pullbacks. For example, we can have like market going up, we can have our stock going up just teensy bit, like on a shallower angle, but the previous movement was such that it, for example, formed a flip zone, zone that was support, now is resistance. And now, since the market's going up, the stock is also going up, but is having trouble in this area. So what is to be expected, if the intraday movement confirms it, is that when the market, decides to go the other way, we're expecting a much harder movement to the downside from our stock, which has shown negative divergence. So basically, there are scenarios like this to keep in mind, and also. One thing to keep in mind, which is also very important, is that the stock can be viewed on many different levels. So like you just don't look at the stock like this and say like, yeah, it's bad or it's good or whatever. Depending on your holding period and for the time you plan on to take a trade, it can be good and bad at the same time. And this stock is actually the first on the list, but I think it's a good example simply because it's such a bad example. Let's just take a look what I mean. So first off, in the phase of manual scanning, the first thing I would see is this like choppy, overlapping, weak movement, right? And that is something that for me personally highly discredits and filters out the stock. But an important thing to keep in mind is the nature of movement of the stock. You can actually see that this stock in a time period where it actually did have like, you know, decisive clean movement was also very choppy and overlapping, and like, you know, that's obviously the nature of the stock. That's how it moves. Does this make it a good trading candidate? No, but it definitely you know, paints a different picture when you see movement like this. So depending on your holding period, this stock could be good to trade on an intraday level, and it actually turned out that it is, and I'm gonna go into that a bit right now. But the thing is to keep in mind, like when we're talking intraday trading, people for some unknown reason usually assume like very small time frames. Like they assume like 1 minute, 2 minute, 5 minutes holding periods for that last for like, I don't know, like you know, 10 minutes, half an hour. We do have trades which you basically take for a like, you know, very short period, like for an hour or so. That's something that happens. But we also, depending on the market context, we also have trades that actually can take like for several days. Like in the previous periods when the market was much more decisive and much more certain, we had trades which we held for like, you know, a couple of weeks. So basically that's something to be kept in mind. Now let's just take a look at this stock, what's happening. So basically in this period we have this like congestion here, then the stock shows negative divergence towards SPY, towards the broader market for this period, then reaches this zone, like it makes this uptrust on low volume. When you take a look at it on daily, you can actually see it like going up on low volume, and then you actually see volume pick up. There's like a huge amount of trading here while the market backdrop is bullish, like the market's going up. You have the stock reach this level, huge amount of volume, huge amount of trading going down, and on the next day you actually see this movement going down. And this was something that was pretty clearly done in a flip zone. So that's something that's, you know, I'm just gonna point these things out actually here like this. Just gonna point these things out to you guys. How we go about determining flip zones, how we go about finding our support and resistance zones, that's something that we're going to discuss in a separate video. But I'm just giving you a short glimpse of the things we'll be looking at, for example, on an intraday level. Like here, it will be very easy for us to just see on the scanner, we see this huge engulfing bearish bar while the market was going up, and here it was pretty obvious what was going to happen next. So that's one of the scenarios we can look at. Let's just go for some other stocks. So yeah, this is basically nightmare fuel. I'll just skip these real fast. Same goes with this, of course, too much overlap. But yeah, this is also a cool point. Like this stock is overlapping, right? Too many overlapping bars. But when you look at this stock, it also has many overlapping bars, right? But just take a look at the EMAs, like SMAs. Like you can see clear directive movement here, and you can see like this, like, you know, joining and consolidation period. Like here, there's this like overlapping range bound movement, which is a stock basically that I would not waste even a second on looking, because it'd be pretty clear for me that there's nothing interesting for us to see here. This stock looks interesting. Yeah, okay. So basically what we have here is decisive movement to the downside. You can see pretty clear negative divergences happening here. I actually see that we analyzed this stock a couple of days ago. Pretty negative divergence here on this side. Then the stock actually found support here on high volume. Did the turn quote, like found like head and shoulders pattern. It's not something that I trade, but I do notice it when I see it on the chart. Moved up on a strong volume, moved up. Now it's in a post earnings phase where it's basically just trying to congest above the 200 EMA. What I do like, what I don't like, yeah, I found it interesting that it's respecting this zone. I really do like this doji bar here, the spin bar, sorry, but what I don't like too much is that on a day that SPY is showing strength, I really don't like this inside BS move. So yeah, if it broke up again, above this trend line, went up on a strong movement when SPY was, the market was going either lateral or was going making a weak move up, having it shown a sign of strength like that would be interesting for us. But again, the holding period would be pretty short, simply because there are just too many resistance zones on the left side. Whenever a stock is making a comeback in such a way, you always have to be mindful of the left side of the chart and to see like what is the things, what are the levels that you should be looking at. And there are like some pretty clear levels here on all of these. So yeah, even here there's like a lot of levels. So yeah, if I manage to catch this breakout here, like with all the market backdrop being positive, I maybe would have traded on an intraday level. The second option is if the market backdrop turns bearish, goes down, I will probably be interested in catching it in this pretty obvious flip zone. I will set my alert somewhere around this level. All right, I'll just do one more to see what. Yeah, yeah. This shouldn't be looked at more than like half a second. Yeah. All right. So this obviously again something that I wouldn't really be looking at to trade, simply because there's just too much baggage in the left side. But it does have an interesting phenomena that jumps out to me, and I'm just gonna call it out here. Even though it might not have actual trading value at this point, it's something cool to keep in mind. So when you have a stock that has this violent movement to downside, reaches a huge volume, and has this V-shaped reversal right off the bat, it usually leads to consolidation phase that lasts for some time, like this, phase where basically just like congesting in sort of way. But it usually does not happen this far up. Like when you look at it, it's actually in a 50% zone. It's usually something that happens on the bottom side. What does this actually mean for us? Well, it did actually test it and went up, and on this rim it actually managed to form like this range bound activity. Now in and of itself, this is again not very useful for us, simply because there are just too many resistance zones here for us to be taking any note and interest in this stock. But I would also be very aware of this this range bound activity that's happening on the 50% level of this volatile move. So if this stock, for example, in one scenario, if this stock was to show positive divergence, which it's not, but if it was to show positive divergence to the broader market, I would definitely be mindful of this, that somebody is actually stepping up and holding this stock at this level here. If it was to show like weakness here, then again it would it is what it is. But in this context, it's something that I would be mindful of. So yeah, not to make this video too long, that's just a short sample of what I actually look at when I analyze these stocks in such a fashion. Not to derail this playlist too much, we're gonna end this one here, then we're gonna finish the playlist to its end. We're gonna go for some basic concepts of trade management, and once we're done with that, then we're gonna make maybe a separate playlist dedicated entirely to technical analysis, how I define my levels, my key zones, what indicators I look at, how I use the indicators, and stuff like that. So with that in mind, I'm gonna end the video here, and I'll see you guys on the next one. Cheers.